We own an office building in Moscow, okay? So, we are invested in Russia, and we're highly sensitive, obviously, because I think we have 2 billion euros or a little bit under in Central Europe. And so our view was that without further escalation, it would be contained, hopefully become like a Cyprus or a Georgia type event. I think that it's highly political. I'll stay away from that and just try to focus on the economic side of it. We had a panel here maybe 3 months ago or something, and we were talking specifically about Russia, and it all has gone for the worse since then. But I think that they were trending in the wrong direction in terms of macroeconomic side of things, if you will. I think that the geopolitical part of it was making it worse, and now with where it is, it's really hard to call what's going to happen in Russia. It's going to be unsettled for some time. It's been, I would say, there's long-term impacts to the actions that they've taken, and foreign direct investment is moving out of the country. Retail sales are dramatically down. Everybody knows where the FX is, and they're now in recession. Where does that is, I think, a fact. I think Yost would say the numbers are for sure going to come out in Q2 to be negative, and a lot of people don't realize that, but that is the truth. Now, there is a very large local what's becoming an institutional market of local Russian capitalized groups. So I don't think that their real estate market's going to go off the rails. I think watching retail will be interesting to see how long you have kind of a slowdown in terms of consumption there. And as it relates to the impact of Central Europe, again, without further escalation, which seems to be every day, you look at a different headline and you see helicopters down, and it's hard to say exactly what's going to happen. If it lessens and there's no further escalation, we think that there's not really going to be any impact in Central and Eastern Europe, which some people may say is naive. But if you look at the public markets, you look at the public equity markets, you look at the debt markets, Central Europe is just not trading as an emerging market. It hasn't moved at all. The movement has been with Russia. All the emerging markets have gone in negative directions for the most part on a broad level. And Central and Eastern Europe is not trading that way. So we don't see it in the occupier market of real estate. We do not see it in the capital markets of real estate. We don't see it in the debt capital markets for real estate. So it's not just to be bullish. I just don't think without some major incident, Poland's a NATO country. It's all, they don't like the border, concern right now. But I think it's an emotional issue, not a real economic issue. That's our view.
When Ukraine really popped up in the press, first thing we did, we looked at it from a perspective how the interlink is with the export from the region to Ukraine to Russia, and then we found out, fully unexpected was for me as well, that it's a low single-digit number in percent. So the relationship import-exports made me a little bit more putting me on the safe side. So we have been sending out to our investors. There is no impact now because 4 or 5 countries where my investors, also about 2 billion in the region, our investors have a direct border with Ukraine. And if you look at the whole Europe map, it's getting very obvious there might be an impact. We have on figures said it might be below 100 basis points if something is materializing. But answering your question now, as long as you inform properly, especially in the direction to the US's, because the Asian people have their own view and they get themselves very quick informed, especially in the direction of the new dry powder from US, we don't see any impact now.